Okay, good morning, traders, and welcome to Be Meta Trading Yogi. And today, October 7, we're going to do technical analysis and look for a trade on the E-mini S&P 500. Now, today we're going to have to be very, very careful, right? We're going to have to be very careful because of yesterday's news. We're going to see some volatility in the market today. We're not sure how the market are going to react right at the opening bell when yesterday the President Trump announced that he would not negotiate with Congress and the Democrats for the stimulus check. So we saw a big, well, not a big, but we saw a pullback right yesterday. If we look right here, just give me a second, let it arrange. There you go. If we see right here yesterday afternoon when the President Trump made his announcement, we saw right there, right? If we look right here, we saw a big push all the way down right there, right? So we'll see what's gonna do for the market condition this morning when we're gonna open. We're just gonna be a bit more conservative. We're not gonna take any gamble trades. And yeah, so that being said, let's set our technical analysis. Very good. So what type of day are we having today, right? What type of day are we having today? Are we having a range day? Are we having a trending day, or do we have a trend into a range day, right? Uh, if we look at first glance at the market right now, if we look at the first glance, sorry, of the market right now, we can see a big spiking channel, right? We can see for, let me grab my rail lines right there. How could we draw this, right? Actually, we could probably say a spike, right? A spike into a channel, right? We see right there, we get the spike. Give me a sec. There you go. Right? We look right here. We have our spike, and then that spike transition into a channel, right? The spike transition into a channel, but, and this is it's minute. We're not sure yet if it is a range, but if we look right here, it's starting to transition into a range. There you go. So we'll keep an eye on that, and then after we'll look where would be a good entry point to get into the market right there, right at the 38.2 area. We'll be looking for a nice pullback and overshoot that would go past the channel, right? Maybe something like this, giving us our pattern, and then looking for something long. And that is if the market accept, right? If the market accept the price action this morning, and if not, then it's just gonna crumble all the way down back to around 33.30, where we saw the last support, right? So anyways, that being said, the market is going to open in 2 minutes. The markets are going to open in 2 minutes, and we will see what will be the price action. If you have any question, ask them in the Q&A box. If you have any question, ask them in the Q&A box or the chat box, and I will be right with you. But as of now, it's a waiting game. We'll see what's going to happen this morning. Oh, if we also look on top right here, we can see, right on top right here, we can see yesterday's range might be also into play where they're going to try to retest that range right there, right? So let's see what she's going to sing. We'll wait 1 minute before the opening bell. There you go. "30 seconds to go." And there you go. 6:30, the opening bell. I expect that we see something like this, right? We'll go give us our pattern into our 38.2 and then take it from there. $300,000 contract traded so far this morning. We've got some good volume, right at the opening. We're on the 300,000. If it doesn't die down, we should do good. Let's just hope that it's not going to be a melt up day, right? Let's just hope that it's not going to be a melt up day. As we can see, keeps on going up, right? This morning, the buyers just went, it doesn't matter. We're not hoping for a pullback. We're not waiting for anything. We just want to see this market go higher. We want to reach our highest high. We're back right now at almost at the level of the previous crash in February that started in February, but really got underway in March. So we're back at that area, right? We crashed at 33.97. We're at 33.90 right now, right? This red line right here was the level where we crashed last time, and hopefully we'll punch through it, right? If it's going to be a melt up market, what I would like to see, I would like to see the market just like push through that line and then use it as a support before going back up, right? If we could see something like that, that would be very good. If not, well, we could very well see a rejection, right? We could very well see a rejection from the market, and then they're going to try to push through. It's going to get rejected, and then it will become a zone of resistance before it goes back down, right? If we keep melting up, these are the two scenarios that I am anticipating. Now, at any time, obviously, we There's no way to actually know exactly what's going to go on. So we need to apply our technical analysis to find the patterns that will give us the reliable trades. Now, that being said, if you guys have any question, you want me to talk about something, please let me know. In the meantime, we're going to wait to see what the market is going to do. Give me a second, I will be right back. Also, if this right here, this portion right here is a range, we could very well see the market, right, play around like this, right, go back up, right? We can see a day that could look like this as well, right? We just don't have enough information right now to know exactly what's going on. You just need to pay attention and see what's going to happen. As we see, we're reaching a little bit of a resistance right here, right? We're getting a little bit of a resistance right here. So here, that resistance, is it indication that in this area right there, right, we have a lot of sellers waiting to punch the market back down? In any case, right now, it is very hard to find a good trade for this morning at the present time, simply because we're way too high to keep on buying, right? But then again, the momentum, this morning's movement, right? This morning's movement right here is very bullish, right? The buyers are taking control over the market. So that being said, yeah, we really have to be careful. We can't just get into a trade because we're antsy. We want to trade. If yesterday you didn't get a chance to scalp on those 3 points, you might be suffering right now of the buyer's anxiety, right? Where you just want to get into a trade to feel like you're a professional trader. Well, always remember this, right? That the best trade sometimes is no trade at all. And this is one thing that my coach told me that really changed my perception on how I look at the market, right? Is in 1 second, in merely 1 second, you can make an entire day's salary in 1 second. And then in 1 hour, you can make a whole week. In 1 hour, you can make a whole week. Sorry, in 1 minute, not in 1 hour. In 1 minute, you can make a whole week of income. And then in 1 hour, you can make a whole month. In 1 hour, with 1 hour trade, with the right trade, you can make a whole month. And then with 1 day, you can make a whole year. If you catch the right trade at the right time, you can do a whole year in 1 day, right? All of your trade can be condensed in 1 day, meaning that if you take the right trade, you can hit enough point to cover you for the rest of the year. So that being said, our job is to be patient. Our job is not to be trading every single trade that we see. Our job is to be patient, waiting idle on the sideline, to wait for our play, right? To wait for our play that we practice day in and day out, to get into the market at the right entry point, to manage it the right way, to do our risk management the proper way, so on and so forth. So our job is to be patient and not to be trading every opportunity that we see. When we see a reliable trade, we get into the trade, we manage it the way our trading plan is designed, and then from there, um, we become profitable. But when we try to trade just for trade because we feel that we're doing nothing, staying idle on the sideline, this is when it starts to cost us money. I can tell you at great length about that, right? So that being said, let's wait, right? It's too high to buy, no confirmation to sell. So right now we're going to wait for a pattern to show up, right? A nice pullback, some volume getting into the market, and then our pattern to get into a trade and make some money. Just give me a second, guys. I'll be right back. Sorry about that. I am back. So now this morning we're waiting for a pattern for something worth trading. Let's look right here. See, we see right here, we have a lot of buyers. Well, not a lot of buyers, but we have some buyers right there that are trigger happy, that they're looking at this micro, right? This micro movement right here, and right away setting their 38.2 pullback, and then right away putting their order in. So we can see that we have that we have a lot of anxious buyers just trying to get into the market, and we really have to be careful about that, right? Because this can become fuel for the sellers. And what I mean by that is, if let me grab my line tool. If we see people right here putting their buy order, right? They put their buy order right here, and then the market starts to go up slightly like this. And in this area right there, right, in this area, we have lots of sellers. What's going to happen if we get a strong candle that pushes all the way down here, right? Well, the stops for the buyers, that should be about right here. The stop for the sellers are, for the buyers, sorry, are going to get hit. And then after, we're going to see some, like a market crash, right? Not a market crash, but like a flash crash, where it's just gonna pop all the way to the major 38.2, where here we have a lot of buyers waiting, right? Because this area right here gives us a good value to our trade, right? Our risk reward ratio is much more interesting in this area, right? In this area right here, than this one right there. Because what is our risk reward ratio for this movement, right? For this pullback, if we look at it, that gives us a 4.5 points risk reward ratio, right? So we have 2.5 points as that we would risk, and then after, and this is if you put in your buy order all the way at the bottom. But let's say you've put in your buy order here, because sorry about that, made a little mistake. If you put in your buy order over the EMA, where we would be putting our buy order, right? So we've got a return of 2.25 for risking right? About 3.25 points. So risk reward ratio wise, this is not a good trade, right? This is not something that is appealing to us that we would consider buying simply because there's too much risk to see the buyers getting into the market the second we reach that zone right here, and then after it would take the market down, right? Now, it is not a golden rule. They could very well, sorry, punch through that. But for nonetheless, right? That being said, we're way too high to buy and no signals to sell. So let's wait to see. We don't even know if this area is a right. We don't even know if this area right here is a range or it's simply we should be drawing our channel something like this, right? We don't know yet. We don't have enough information. We're close to 400,000 contract traded this morning, so we're getting somewhat of a good volume into the market. It's still a little bit sluggish. I would like to see it move a little faster. So let's see what's going to happen, right? Are we seeing an overshoot? And if we see an overshoot right here, then there's a very good chance, right? There's a very good chance that we could see an undershoot right here, right? And this is what we want to see. We want to see the market go below the channel, give us a pattern, form a trap, and then take off again. But as of right now, we're in limbo. We gotta wait for something worth happening. And here in the meantime, since I forgot again this morning, here in the meantime, let's take a second right there and read the risk disclosure for our trade room, right? Trading security futures involves a risk of loss, including the possibility of loss greater than your initial investment. Security futures may not be suitable for all investors. Prior to buying or selling a security future, a person must receive a copy of the risk disclosure statement for security futures contract. Copies are available from your broker or from your National Futures Association at www.nfa.futures.org. This webinar is for educational purposes only. In no way should you consider this trade room to be a trade call service. If you choose to take a trade, you do so in your own accord. Bima, the trading yogi, is in no way in no way responsible for your gain or your loss. Right. So let's come back right here to our trade room, and now let's just wait. Just looking in the meantime, if you guys have any questions or you want me to talk about something, now is the time. Ask into the Q&A box or into the chat box, and I will answer them right away. And in the meantime, I'm going to just look into to see if we have anything else we could talk about. If we come back right here, let me see something. If we go there, here, let's look at this wall. We're still looking at the market right now. Nothing much is happening. There's nothing we can do. So let's look at this right here, right? Trading terminology, trading terminology. What of the understanding the lingo of a trader, right? Let's talk about some of the lingos, some of the terms that we use when we trade the futures market, right? What is a commodity futures market? A commodity futures market is a physical or electronic marketplace where traders buy and sell commodity futures contract, right? Now, pretty much all trading happens in front of your computer. I don't even think there's any more traders on the trade floor of the Chicago Market Exchange, right? If I'm wrong, if you guys know about this, let me know. But I don't think we have any more trader being trading live, calling the trades on the Chicago Market Exchange, right? So everything happens in the electronic exchange as we're doing right now, right? When we trade from our computer, from our office, we're into the what do you call it there? The commodity, sorry, the electronic marketplace. Sorry about that. Now let's move forward. What is a commodity futures contract, right? What a commodity futures contract is a purchase and sale agreement having standardized terms, right? It's very simple. We have a market exchange, and in that market exchange, they've already defined the parameters of the contract, the value of the contract, and the value of each movement of those contracts. And then after they make sure that the laws are regulated, that nobody is screwing anyone, so on and so forth, right? So including quantity, grade, price basis, delivery method, and particularly commodity to be delivered on an agreed later date, right? So it's sort of a, how can I call this? Well, it's a marketplace where we have regulators making sure that everything is kosher and nothing is happening on the down low, even though if sometime it does happen, right? So then after our next one is a candlesticks, right? What are the candlesticks? Also called Japanese candlestick. It's a style of financial representation used to describe the price movement of a security, derivative or currency. Each candlestick is equal to its set limit period, i.e. a 10-minute chart. Each candlestick will equal 10 minutes. Therefore, a 3,000 trade chart, each bar, each candlestick will equal 3,000 trade, right? So if we look right here, each of these candles right here are worth 3,000 trades. So yeah, those are the candle, the Japanese candlestick. Next, the next one is a chart, right? What is a chart? Well, the chart is what I put in the screen every morning. A chart is a graphical representation of data in which the data is represented by symbols such as bar in a candlestick chart. Then after, well, if we look right here, right, each bar represent the time period, and the chart in the back where the bars are is the graphical representation. Then after, what is a long position, right? When I talk about a long position, it's a buyer of a futures contract. A long position is the number of purchase contract held by the buyer, right? So if I hold a 4 contract position, that means that I bought 4 contract, and it's a long position. That means it's a buy and not a sell or a put order, right? Then after, the next one is, what is a short position? Well, a short position is a seller of a futures contract. A short position is the number of sales contract held by the sellers. So we can say a short position, a put order, or the sellers are all representation of the same thing, right? Then afterward, the next one is trade volume. What is the trade volume? The trade volume is the number of transactions executed for a particular time period. The purchase by the buyer and sell by the sellers of one futures contract equals a volume of 1. Purchase and sales are not double counted. Right? And if you can see right here, this is a volume graph representing on a tick chart, right? Each bar represent the trade order, and then the candlestick represent the trade or count or order, and then after the volume. The volume bar right here represent how many contract were how many contract, and not how many trades, but how many contracts were traded during that trade bar. Now, the next one is an open interest, right? When we talk about an open position, an open interest is the number of futures contract that exists on the book of the clearinghouse on purchase of sell involving 2 transaction parties constitute an open interest of 1. The number of purchase and sales contract is always equal, right? So, and what is a clearinghouse? Well, a clearinghouse is our broker, right? We send our order to our clearinghouse or our broker, and the clearinghouse push the transaction through the market exchange. Right, so this would be an open order information, right? 4 contracts open, so on and so forth. If you have any question, again, don't be shy, ask them in the chat box or the Q&A box, right? And don't worry, I'm keeping an eye on the financial market right now. It's not doing much other than retesting the resistance on top and then coming back down, yet still melting up. Nothing for us worth trading. So we'll keep an eye on this right here, right? What is a futures delivery? Well, a futures delivery is the transfer of a commodity ownership from the short, the sellers, to the long, the buyers. During that delivery period, ownership is transferred by the surrender of a warehouse receipt or some other negotiable instrument specified by the contract, right? We're not just trading money. We're not just trading air that has no value or whatnot. What we are trading is, well, the S&P in itself, the ETF, there's no delivery for the ETF. But let's say we'd be trading crude oil, right? And we bought a contract of crude oil of 47,000 gallons, right? This is the value of one contract of the crude oil. It is 47,000 gallons contract. Well, let's say that you bought the contract in June, and then in July you're still holding your position and it comes to term. Well, at the end of the contract, right, on the, if I remember correctly, it is the 3rd Friday of every month for the crude oil. It's been so long since I've traded the oil, I don't remember, and my system gives me my automatic rollover. But let's say that you bought your contract in June and now it's July, it's coming to term, and you have not closed your position. Well, the person that sold you your position, right, the sellers, is going to transfer the ownership. And then you're going to have the oil company, right? You're going to have Exxon giving you a call, asking you where to deliver those 47,000 contract, right? A few years ago, well, quite a few years ago, there was a banker that had a position with 20,000 head of cattle, right? 20,000 head of cattle, and he left for vacation. And when he got back from vacation, he had the farmer, well, not the farmer in itself, but he had the broker called him and says, okay, where do you want your cattle? They're loaded up in a truck, right? So we got to be careful about that. Now, obviously, we don't hold our position long enough for something like this to be of an issue. But that being said, if you take a position, you leave on vacation, and you come back without having closed your position before leaving, well, that's something that could very well happen. So we have to be very careful and close our position every single day. And if we're swing traders, we have to close our position before the contract comes to term, right? So futures expiration is the last trading day of a futures contract, right? And we do contract rollover on volume when we see that the next contract trades more than the previous contract. That's when we roll over, and this usually happens a few days to a week before the contract closes, right? Then after volatility, what is volatility? Well, the variability of a price over time, historical or projected implied, as determined by a formula. The volatility, in other words, is when the traders leave the market, right? When the traders walk away from the market and you don't have enough traders trading, you will see a high volatility, and this high volatility will negate our patterns. It will negate our reliability. Sorry about that. Reliability. It will negate our reliability, and therefore this is one of the main reasons why we only trade from 9:30 in the morning until 11 Vancouver time, right? So 9:30 till 11 Eastern Standard Time. For us, it's 6:30 till 8 o'clock in the morning, because this is when we have the highest volume of trader on the market. And when we have the highest volume of traders on the market, this is when our trades become most reliable. This is when the market act as a freight train and is a lot harder to stop and reverse when you have a lot of traders trading the same thing in the same direction, right? And as I mentioned earlier, the clearinghouse, and again, don't worry, I see we have new people on the trade room. Don't worry, our chart are going to come right back up in a second. I'm just going through some terminology, as there's nothing right now happening for us worth trading, right? So back to our terminology. What is a clearinghouse? Well, a clearinghouse, as I said, is the entity of a futures exchange that act as a counterparty to every transaction. The clearinghouse clears every transaction by becoming the buyer to the sellers and the sellers to the buyer. The clearinghouse always hold an equal number of buy and sell contract. The purpose of the clearinghouse is to guard against default, right? They make sure that the market acts according to their regulation. Now, let's talk about the order type, right? What kind of orders can we put on the market? Well, we have a market order. A market order is an order to buy or sell at the market price, right? At the market price. Now, if we're trading right now at 33.89, the S&P 500. So if I click on buy order, buy market, then I would put in at the 33.89, right? And this, we never use this market order, because this is not an optimal way to get into the market. When we put in a market order, it's mainly the people suffering from FOMO, right? The fear of missing out. There's like, oh, geez, the market is going up, let's buy. And they click on the button, right? So we never do that. We never put in a market order. Limit order. Now, a limit order, this we often do, right? The limit order, we often do limit order. The reason, what is a limit order? Well, let's take a second right here. Let me bring up the whiteboard. There you go. Okay, so what is a limit order? Let me take a second right here. Oops, that would not be what I am looking for. There you go. Hello. Why am I? Sorry, I'm trying to change a notation tool and it's not working. So just give me a second right here. Let me bring back a chart. That'll be easier right there. Sorry about that. Sometimes the system screws with me a little bit. Okay, so let me bring this up and this like this. There you go. So a limit order is when we would put an order below the price action, right? So if I want to if I put a limit order right here, that means that the order is going to wait for the market to come back down, retest that price, and when it touch that price, right, when it crosses and come back, that's when it's going to fill my order. Right now you can see it went one tick below, that did not fill my order, and then when it went one tick up, that would have filled my order. Right, that's what a limit order is. And then after, let me bring this back right there. So in order to buy at a specific price or lower, or to sell at a specific price or higher, right? Then after, we have a stop order. A stop order is an order to liquidate an existing position, right? So let's come back right here. Let's look at this chart right there. So let's say that I've put in my order right here, right? Let's take this, whoops. Let's take this right here. So, okay, I've put in my order right here. I've put my stop order right there. Now the market touched my stop order, so it will close my position, right? But at the same time, my target are also stop order. So if I've put a stop order there and then the market touches that line, then it closes my position, right? So this is what a stop order is. Now let's go back to here. There you go. Just give me a second. Let's get to the next page. Let's talk. Well, now there's one order that it did not mention that we often use. It's a buy stop limit, right? A buy stop limit, it means that when you, let me bring this chart right up. A buy stop limit is when you put in your buy order, let's say higher than your price action. The market is going to go up when it reaches the price action where you've put in your buy stop limit order. It's going to touch that line, fill your order, and then if it keeps on going, then you're a winner. If it doesn't, well, we all know what happens there, right? Okay, so next one right here. What is an indicator? An indicator is a technical indicator are used extensively in technical analysis to confirm prediction change in stock trend or price pattern in any trade asset, right? So if we come back again to our chart, right? Oh, I'm still on the chart. Sorry about that. So if we look right here at the chart, we see at the bottom, those are my indicators that I am using in the market, right? They're just tools that I use to confirm my speculation, but they are not necessary for me to get into a trade, right? Is you cannot rely solely on indicators to make your decision. And another indicator you can see is right here, that yellow line, right? This is called the EMA, the exponential moving average. So in our chart, we'll never use more than the EMA right here, MACD right there, RSI right here, and then the ATR right there, right? Those are the 4 indicators that I use on my charts. So now we're still waiting, right? Still nothing worth trading. This is very frustrating. So let's go back to our PowerPoint presentation in the meantime, right? So you can see right here that the indicators that I am using right here. So now let's move to the next one. What is a moving average, right? The EMA, right? The exponential moving average. A moving average is a widely used indicator in technical analysis that helps smooth out price action by filtering out the noise from random short-term price fluctuation. It is a trend following or a lagging indicator because it is based on past price. And because we use the exponential moving average, well, it tries to combine by a mathematical equation the area of where the price is going to want to go So, and we use the moving average, well, we use the EMA, the exponential moving average, as our trigger. And as time goes by, you will see what I mean by that, right? And also the next one, the RSI. What is the RSI? Well, it is the relative strength index, right? It is a momentum indicator that measures the magnitude of recent price change to evaluate overbought and oversold condition in the price of a stock or asset, right? So the RSI is giving us an indication of what the market wants to do. Again, this is the explanation. We use the RSI as confirmation if we want to get into our trade. Then the next one is the MACD. The MACD means moving average convergence divergence, is a trend following momentum indicators that shows a relationship between two moving average of a price. The MACD is calculated by subtracting the 26-period exponential moving average, the EMA, from the 12-period EMA, right? So we use, again, this as confirmation. And if we look right here, right, if we take a second, we look right here, this is not a reliable trade. We're back into that, the highest top. But if we look at our MACD and our RSI right here, this is the MACD right there, and then the RSI right here. For us, when the MACD and RSI cross the middle line right there, right, when it crossed the middle line with a pattern, right, we absolutely need a pattern. We don't just trade the MACD and the RSI, but with a pattern, right, a one try, two try, with a retest, so on and so forth. It gives us a pattern. Well, give me a sec here. It gives us a pattern. Then we can take a reliable trade when we have our indicators confirming what we're looking at, right? That being said, let's move forward. So these are some of the basic terms used in the trade room. If you guys have any question, let me know. And let's take also a second right here. If you guys are ever interested, everything I'm showing, everything that I am teaching right here, right now, is simply, not simply, but they all come from my coach, right? Before becoming a professional trader, I blew 2 accounts. I thought that YouTube would be good enough to teach me how to trade. Then I took some course with some quack that blew another account. And then after I found my coach right here, I've been trading with this guy for a couple of years now, profitable, doing this every single day. So I will not blow smokes. I won't tell you that everything that I'm teaching you is of my own doing. Far from that, right? Everything that I am teaching you right now comes from a professional trader that taught me how to do what I do every day. And if you guys want to have his contact information, if you guys want to follow his course, write to me at bimatrading@gmail.com, and I will send you all of his information. Now, that being said, let's bring back our chart and see what's going to happen. Now we're starting to see a small pullback, right? We're starting to see a small pullback. Let me remove this right here. Let me grab some of my tool. Now we can see that we have a falling resistance right here, right? We can see we're having a falling resistance, and at that given time right now, there's still nothing for us to trade. We're just waiting for the right pattern, right? This candle right here, right? This candle right here was a trigger candle, right? We could have gotten in that contract, but we were too close from the day's highest high. Our risk reward ratio was not there, right? We did not have enough room for us to make enough money on that trade. So I stayed away from it, and thank God, right? Because if you look at it right there, right after giving a few points, we might have reached our first target, right? Because we always put our first target at 2.5 points, right? So let's see if we would have reached our first target, if we would have gotten in at the trigger entry right here, all the way up there. No, you see, we would not even reach our our first target, and then after it flash crash right here, and that would hit our stop loss, and we would have lost money on that one. So I'm very happy that we didn't take it. Let's just see now what we want to see happening right now. We want to see the market pull back, right? We want to see the sellers get into the market all the way down to the 38.2. But let's readjust our 38.2 from this morning, right? From this morning, our 38.2 has shifted from the bottom right here where we've got our green area where we have our buyers, and then it went a bit higher. So let's move our, there you go. Let's move the zone where we're hoping to see the market produce a pattern. And let's readjust in the meantime, right? Let's readjust. Is this a range, right? Is this going to be a range? Are they going to come back here? Are they going to come back here, right? And retest this zone? Are they going to? Are we going to see a battle? Is this going to be a confirmed range, right? Let's see what's going to happen there. But really, what we want to see that it's a range or not. We want to see the market, right, go below that range to the 38.2, give us a pattern, and then go back up, right? Once we see our pattern, then after we can feel confidence to get into the market. But right now, as of 10:14 Eastern Standard Time, we don't have anything worth trading, and past 10:30 there's never any gamble trade past 10:30 because the best trade happened between 9:30 Eastern Standard Time and 10:30, right? So for us, let's see what's going to happen. If the pattern comes up after 10:30, we're going to look for a picture perfect pattern with all the confirmation, with the RSI, the MACD, the EMA, the volume. Everything has to be into play. But in the meantime, let's wait and see what's going to happen. If you guys have any questions, please ask them in the Q&A box or into the chat box, and I will be right with you to answer your question. See right here, we could consider this right here a 1 try, a 2 try, small little trap, strong candle closing over the EMA. We could be looking for an entry right here, but we don't have our pullback, right? We don't have the proper pullback. And the next thing also is we have that range right here, right? We have that range right here that we have to be very careful, because always remember that range will act like magnet, right? Range will act like magnet. So one thing we can maybe expect is a pendulum swing, right? A pendulum swing. And what is a pendulum swing? Well, the Bible said it best: as above, so below. This is what a pendulum swing is, right? Whatever will happen on top will happen below, right? This is a pendulum swing. So if this range is in play, right? If this range right here is in play, then the pendulum swing is in play. And then if we get confirmation of our pendulum swing in our 38.2 area, well, we can expect to have a strong, reliable trade, right? So again, we see right here, the market wants to go back up. They're probably maybe using this right here as a range, right? This might not be in play anymore. But like I said, usually, and if you guys come here every morning, you see, I have no issue taking those trades before 10:30. And on any given day, I would. But because of yesterday's announcement by President Trump, I don't feel confident in the buyers right now into the market, right? How much value do they really have right now for this trade, right? So this candle right here would be the trigger entry, right? So if this is the trigger entry, what value do we have to our trade, right? 7 point, which is not, it's not bad, right? 7 point, $350 per contract ain't a bad thing. But like I said, because of President Trump, and look how much we have to risk, right? We have to risk 4.5 contract for a gain of a 7 contract, right? Which is not bad. It's almost a 2-to-1 return ratio. But for me, with the market condition right now, with what happened with President Trump yesterday, with the announcement of Powell, and we saw, right, if we go back to yesterday's session, right, look at that. Look at that big movement right here, right? And it hasn't been retested just yet. So I'm not confident in taking any gamble trade as of right now, right? And here, would we have reached our first target, right? Would we have reached our first target so far? It looks like it is, yes, 3.25. So we would have reached our first target right here, right below that red candle, right? So it could have been a very good trade, but because of market condition, we did not touch it. Now, if you guys got into it, bravo, you've reached our first target. But if not, it's all right, right? Because our job is not to get into every single trade. Our job is to trade the plan and plan our trade. And this is what we're doing right now. We plan to trade in this area right here. This is where we would like to see the market come to give us our pattern. Now, if it doesn't, yes, often we can trade something like this, right? Because if we look, we have our retracement, right? If we take, right, the previous major swing low all the way to the swing high, we see we are exactly at the 38.2, right? We have our confirmation. We have our pullback from the previous minor move. Sorry about that. Sometimes I get a brain fart, right? We reached the 38.2 from our previous channel, right? This right here is our previous channel. And as we can see, it would have been a reliable trade. But as I mentioned, because of market condition, yesterday's announcement, the fact that we are at today's highest high, and we are close to the previous crash from February and March, right? This right here, this price right here is a March crash price action. Well, actually February, I think around the 19 or the 20. When did the market crash, right? You guys remember the date? Just give me a second here. I'll look on this chart right there. So the last day was the 20th of February, right? The 20th of February, we saw our the first bearish move. And then after it crashed all the way down to the 28th, we had a few days of the bulls thought that they had reached their bottom. And then after, on the 5th, 6th, 7th, all the way down, it kept going, it kept crashing down and down and down, right? So anyway, so for that reason, this area right here, this area holds a lot of sellers, right? All those pessimistic traders that keep saying market is going to crash again are all waiting right here to push the market down. So for that reason, I did not touch this trade. In hindsight 2020, for sure right now, I would have liked to gotten in right here and taken this trade. It looks very nice, but as I mentioned, the market conditions are not giving us something to feel comfortable trading. So now it's a waiting game. Let's see what's going to happen. 7:22 in the morning. 37.22, waiting for a pullback to our 38.2 area. As we can see right here, the falling resistance is not in play anymore. It could actually become a zone of support. Who knows? Let's see what's going to happen. Right, so we had an open loop right here, right? We had an open loop right here. Now the open loop got closed. We have another one open here, right? This is our next open loop. So maybe they're going to come and close it, run past it, down to our 38.2, giving us something worth trading. And see, we get confirmation, right? We get confirmation right here that we have sellers waiting in this area to push the market. So our analysis are good. Our analysis are good. Now all we need is the right setup. So let's see what's going to happen here. But now our volume is pretty low. If I look right now at our market watch, the volume, right, we started to trade this morning at 300,000 contract, which is not bad, but now we're is only at 550,000 contract. We should be around 800,000 to 1.2 million contract right now, and this has not happened. So we don't have a lot of volume. And when I see this, the next thing I'm going to go check, right, is I'm going to go to the Econoday website, right? I'm going to go to the Econoday website, and I'm going to click right here. I'm going to bring up this page, right? The Econoday website, and I'm going to come and look at what is going on, right? What do we have today? What are we waiting today to see such low volume? And the first thing that catches my eye at 10:40 a.m., we have Powell giving another announcement, and it says trying to prevent the economic damage from getting worse. Let's go read this, right? Okay, so Powell is turning to Congress for a new stimulus package. Says that there's more. Yeah, this will be interesting. Says that there's a higher risk of a market crash if we let the market or the economy get into a recession than to inject cash into people's hand, right? So let's see what's going to happen in 12 minutes. Is the market, how the market is going to react to his announcement. And this is probably why we're seeing such low volume right now this morning. Right? This is probably why we're seeing such low volume this morning, because people are going to wait. They remember what Trump said yesterday. They saw what happened to the market, and they're going to see what Powell is going to say. If it's going to stimulate the economy, is the investor going to accept or reject the stimulus idea, and so on and so forth, right? So for that reason, we have to wait to see what's going to happen. We are at 7:28. 7:28 Vancouver time, Western time, almost 10:30 Eastern Standard Time. So let's see what she's going to say. See again, 38.2, boom. Then we see, you see this big candle here? These usually will indicate we're going to see some big candles go down. All right, we retested this high. The buyers reach their target, their objective. Now this one right here becomes appealing to the sellers. Looks like the sellers are getting in the market, but the buyers are defending their position. Oh, the buyers got to defend their position, right? Push right through. Is this a last stretch before Powell's announcement? Only time will tell. Still awaiting games, nothing much happening. Did you guys take any trade this morning? And were those trades profitable? For us, we're waiting for our patterns. We're waiting for the market to come back down to an area that we find value into our trade. Today, we're looking for only picture perfect trades. because of market volatility. We shall see. So still waiting for a pullback. Starting to think that maybe we're not going to see it 5 minutes before Powell's announcement. Right? This area right here could be considered a pullback at the 38.2. But for myself, as of now, I'm not sure. Does that look like this? Maybe something like this. So maybe the major swing. Let's redo our analysis for this morning, right? Let's redo our analysis for this morning because we never retested this range right here, right? For the whole morning session, we stayed on top of this. So let's just wait and see after Powell's announcement what the market is going to do, but we'll just readjust ourselves a little bit accordingly, right? We're just going to readjust ourselves to forget about the major swing, right? And let's just readjust our analysis to see if we can find something worth trading. Just going to clean up the chart a little bit. Okay, that being said, this right here, okay, we're going to remove the pendulum swing, right? Because I don't think that thing is in play right now. We'll remove our 38.2 area in a second. This zone right here, right? I'm gonna bring it back right there. I'm gonna bring it back right here. this. I'll remove. There you go. Okay, this is starting to look a bit better. Now let's look at our 38.2 pullback right there. So this is maybe a bit more what we would be looking for a reliable trade this morning, right? We've readjusted everything. We and this is right. We have to adapt ourselves to the market condition, right? We saw something this morning. It was not exactly what happened. It's not exactly what was into play, and now we have to readjust ourselves, reevaluate what we're looking at, so we can make sure we don't miss trading opportunities, right? We stay disciplined. We don't take any gamble trades, but we do adjust ourselves when it is called for. So again, let's hope that we see, and maybe with Powell's announcement, something like this is going to happen. Let's see the market pull up to this area and give us a pattern. There you go. People getting out of their position before Powell's announcement. All right, 7:40. Powell's announcement is right now. How is the market going to react? What is this micro move? 38.2. We're in the 38.2. So we get our first try right here. All right, we got our first try right here. For our second try. 10:45, sorry, 10:45 in the morning, 15 minutes left to our trading session. Are we going to see, right? Are we going to see a one try, two try with a trap going back up? That would be interesting to see. Obviously, I would like the market to come down here before it goes back up. But if that's all she's going to give, then maybe that's what we're going to trade. Let's see what's going to happen. So right here, we have our double bottom. Did not give us a trap. I would like to see a trap, right? If it gives us a trap, we'll have the fuel to push it higher. A strong closing candle over the EMA would be the trigger on this one. Strong closing candle over the EMA would be a three-point risk right here. So here's what I'm going to do. Is I'm going to put a limit order instead of buy stop limit order. I'll put a limit order because I would like the market to come back here for me to get into it, right? To keep my risk reward ratio. Is she going to go without us? Is she going to give us a small pullback? Let's see. So our risk reward right now is we're risking 12 ticks to make 19 ticks, right? Risking 12 ticks to make 19 ticks if she comes back and fill us in. She's gonna fill our order. There you go. We're into the trade, right? We're into the trade. Our order got filled. Now let's see what she's gonna do. So let's see what she's gonna do. And maybe not, right? It might get rejected right here. Looks like it anyways. But sometime when we see a big candle like this, it can keep on going, or it can very well just shoot right back up. So let's hope it's going to be one of those cases, but I don't think so. I think we're going to get stopped out. Could be wrong. I could be wrong, right? So now we have two options. We either let it go or we close our position at the point of entry, right? If it keeps on going like this, we might want to just register a loss, right? We might just want to register, not a loss, but a break even instead of a loss, but at the same time, she could very well just keep on going. So for myself right now, and I've just realized I didn't do my proper check. I was going to take 2 contracts on this position, and I only took 1 contract. Right? I only took 1 contract on this position, so I'm going to keep it open. Right? I'm going to keep it open. We're only risking 2.5 points, right? $125. That ain't bad at all. So let's see what's going to happen here. Right? We at 0.5 point gain. So right now, I'm going to move my stop to my entry. I'm going to move my stop to my entry because if she crash back again, I don't want to be in that position, right? I don't want to be in that position. Now she has a very good chance of stopping me out and then after keep on running. But nonetheless, I don't really care about that. I really don't care about that. I care about protecting my account. And I like to see a positive win. I don't like to see losses, right? So what is going to happen? See, there's a big battle that is going on right now that when it reached this zone, right, the sellers are trying to push it back. Are the buyers going to be able to defend their position, right? Are the buyers going to be able to defend their position right here? Let's hope so. Let's hope so, right? So now, since we're waiting here, what I'm going to do is I'm going to move my stop for just 1 tick. And what is this 1 tick going to do, right? What is the value of 1 tick? The value of 1 tick is $12.50. How much is my commission and my market exchange fees and whatnot? And when I get into a market for a round trip, right, for a order round trip, it is $6. So for the few minutes that I waited, I made sure that I covered my broker's fee, my commission, and then the few minutes that I was waiting. Now we see keeps on going up, so I'm going to start trailing. I'm going to start trailing right here. We have 1 point on our trailing stop, right? 2.5 point to our top, higher top right here. Now, what is my 1-to-1 target, right? What is my 1-to-1 target here? So if we look, my 1-to-1 target is right there, right? So if I would have had 2 contracts, this is where I would have put in, right? Give me a second. If I would have had 2 contracts, this is where I would have put in my first target, right? But because I don't have 2 contracts, I can't do that. I can't do that because, well, I can, but that would just bluntly close my position. So now what I'm hoping that it would happen is that the market is going to keep on going up, right? It's going to pass my first target and it's going to at least try to reach today's high, right? At least try to reach today's high. And I'm going to put it higher than today's high, right? Because at today's high, right, once the market reaches this right here, I'm going to grab my stop, right? I'm going to grab my stop and I'm going to move it right here. And the reason why is it's just good trade management to try to maximize my profit, right? But then again, if I don't think that she can produce any more, then I'm better off closing my position at my 1-to-1 target than to let it stop me out. There's a good chance she stops me out, but I have the feeling that she's going to keep on pushing, right? I'm going to have a feeling that she's going to keep on pushing. This next candle is going to tell us. If this next candle closes bearish, right? If it closes red, oh, there you go. It just stopped me out. But if it would have closed red right here, I would have moved my stop 1 tick below that red candle to see if it would have kept on going. So that being said, we see we have our trade for the day. Only 1 point, but 1 point is better than a loss. That is for sure. Yeah, so we have 7 minutes left. Let's see if she's going to give us another pullback, maybe something in this area, this 38.2 area that we have a better value to our trade. Again, if you guys have any any question in the meantime, you can post them in the Q&A box or into the chat box, and I will answer them with you in a second. It always helps to move the class forward. Was as we see right here, right? This is very indecisive. The market is not moving fast nearly enough for me to be interested and taking a chance to keep my stop lower, right, or looser. I have the feeling, right? We see right there, we're starting to get a micro falling resistance, and these, especially at this time of day, could very well, right? I've seen this just like melt all the way back down uh, um, when we see these market conditions. So let's just wait to see what's going to happen. If not, we've made a point on the day, and yeah, ain't too shabby. Wow, it died down. Okay, so I think we can start our closing routine right now, right? There is no, I don't think there's anything else that's going to pan out right now. So one of the first thing that we want to do, and I often forget to talk to you guys about this, but one of the first thing that you want to do is you just give me a second here. Okay, so you want to write into your journal, right? You want to write into your journal. Um, Let me bring up my journal so you can have, there you go. Okay, so the reason why we have a journal is because at the end of the week, of every week on the weekend, we go through our trades of the week. We look at our wins, we look at our loss, and then we adjust ourselves for the upcoming week, right? If we see that we are taking gamble trade, if we see that we're losing money and we need to do something about it, this is the tool that we need to achieve that. And one of the first thing when I start in the morning, right, is today I feel, and you right here, let me grab this for a second. I'm gonna send you on the chat box, right? On the chat box, I'm gonna put this. You guys can keep this in a text file, or you can use a journal software, whatever you want. But it is very important to keep our journal, right? So this is the template that I use, that I created for you guys. Every day I do it a little bit different, but if you like to have consistency in your discipline, this you can use this template, right? So today I feel, and state how you feel, right? Do you feel tired? Do you feel energized? Do you feel excited? Are you nervous? Whatever you're feeling, this is where you're going to post it, and you're going to see over time, right, that your emotion has a great impact on how you feel, right? Not how you feel, how you trade. Sorry about that. This is the same as when I first started to play poker, right? I was playing maybe 16 hours per day poker, and I was listening to a lot of music. And over time, I realized that whenever I was listening to some heavy metals or to some very agitated music, well, I would become a very, very aggressive poker player. And when I would put like more of a lounge, relaxing Zen music, that's when I would be very conservative in my trade. And then when I didn't listen to any music, well, that's when I did my best game, right? So, uh, um, how we feel and how we generate our energy has a great impact on how we trade. And this is very important for us to keep track of that, right? And then after, my observation for today's market conditions are, this is where you put in your technical analysis, right? This is where you put in what you see in the market, right? So today's market looked like, when we sat in front of the chart this morning, that the market was transitioning into a into a range, and then after we saw what was looking like a pendulum swing and waiting for the proper pullback, so on and so forth. That did not happen. We re-evaluated our position, our technical analysis, and today's day went into from a trend into a range, from a spike and channel, which would be a trend day technical analysis, right? So for this afternoon session, if we are going to trade the afternoon session, we're going to wait for a 38.2 pullback from the previous major swing, and so on and so forth, right? This is where you put in your technical analysis. Then after, my goal for today's are, and this is not where you put in how many ticks, how many points, how much money you want to make, but rather, what do you want to improve about yourself, right? Not improve, but what would you like to achieve about yourself, right? So today, my goal would be to stay disciplined, right? So this is where you put in your goal for today, right? Today, my goal is to learn about retracement. Today, my goal is to practice on the simulator, right? So what goal do you set yourself for today? And you need to achieve your goal. This is very important, right? Because this is how you increase the dopamine in your brain, right? By achieving small wins. And by achieving small win, you condition yourself to be a winner, right? I know this sounds like a cracker box cheesy line, but it is. This is how our body, this is how our mind works. The more we achieve our win, the more we achieve our goal, the higher the dopamine is increased in our brain, and the more we are focused into what we are doing, right? And now, after, I have to be mindful of, right? This is the next step in your journal, right? What do you have to be mindful of, right? Are you a impulsive person? Are you a gambler? Are you emotional? Are you in control, or not in control of your, whatever that you know that you have to be mindful of for yourself? This is where you put it in, right? For myself, I know I have to be mindful of my mind, because when I start to get bored, this is where I start to make a mistake. And this is one of the main reasons why you guys are here right now, because I know you guys are looking at my chart. I know you guys are looking at me trading. So sorry about that. I know that you guys are looking at me trading, so I have to stay disciplined if I want to teach you the right way to do it. And for myself, I use the tool of you guys to stay disciplined, right? So anyways, that being said, what is the next thing I need to improve? I've put that twice. Let's remove one of them, right? What do I need to improve on myself, right? What do I need to work on myself? And it does not necessarily mean that you something that is related to the market, which it can be, but it can be also something that you need to improve about yourself, right? What do you know about yourself that needs work for you to be successful? Do you need to be disciplined, right? Do you need to wake yourself up every single morning at the exact same time to be able to sit in front of the chart to be a professional trader? Do you need to work on how you process your emotion or whatnot? Right? I'm drawing a blank right now, but you get the idea, right? What do you need to improve about yourself to be the best version that you want to be, right? And that being said, at the end of the week, on the weekend, mainly on Sunday evening before the market opens up again, you go through your journal, you look at your chart. And talking about the chart, let me grab this right here. Um, let me ask you, answer in the chat box, guys, please. Can you save the chart right now? Can you save the chart that is in front of you? Because I know there's a way to do it. I'm just not sure if you guys, let me just take a second. Let me bring back the chart for you right here. Let me look on Google how you guys can save the chart, or how can I send the chart to you guys. I know that I can do it this way, right? I know I can take my chart right here, then copy the link and send this to you via Messenger. So let me know if you're able to copy the chart from this link, right? You click on the link and then you right click on the chart and you save that chart to your computer. Let me know if this works for you guys. So I'm going to keep on going. That being said, with those charts, at the end of the week, we go through them over and over, looking at our decision process, looking at our trade, making sure that we take the best trade possible. And if not, then how can we improve ourselves, right? So this is the whole purpose of this journal. So that being said, guys, it is 8:05, October 7 on a Wednesday, 1 point scalp on the market. And you can see right here, right? You can see that it is very choppy right now, right? The market is being very choppy. So we did good, right? We did good. We got into a trade. We got out at the right time. We could have maximized maybe another point and a half. But that being said, this could have very well just melted back down. So I'm happy with how we traded this morning. Take a second, get off your computer right now, go do some yoga, go take a walk, do a physical activity, right? We need to stay active. We need to send some blood to our brains. We need to move oxygen through our body. And this is achieved by physical means. So don't stay in front of the computer. Go clear your mind. And this afternoon, when you come back at 9:30 for the afternoon session, make sure that you are trading the patterns, that you find values into your trade. Don't trade when the market is too high. Wait for a pullback, right? Wait for a pullback to the 38.2 to give us a pattern, and then after get into a profitable trade. Until then, guys, have yourself a wonderful day. And also one last thing, right? One last thing, because right here we can see this area. I just want to make one last comment right here. We see right here, we have a zone, right, of lots of battles, right? So let's be careful that we don't have a 1, 2, 3 reversal today, right? And then that the market goes back into a bearish trend. So that being said, have a good day, and I will see you guys tomorrow morning at 6:20 for the market reel. Bye bye, and take care of yourself.